Mike, good to get you back as ever. Thank you for reaching out. You saw me getting buried on Twitter.
I did.
Trying to get people's heads around the fact that it's a big world out there. Look, you're at the forefront of all of this. You've been involved forever. What is this altcoins, the digital asset space? What does it mean to you?
So, it's interesting. Altcoins in some ways got a bad rap in 2017 because there were so many coins that got issued. Some had real purpose, others didn't. They all believed they had purpose. In the crash of 18, altcoins went down 99%. Crypto market cap went down 98%, right? Bitcoin maybe down 80, Ether a little more, but lots of people lost lots of money. And so there's a the term shitcoin, altcoin has a taint to it. I like to think of things in three buckets, right? Bitcoin really, as digital gold, has kind of taken this idea of store of value and won for a lot of reasons. I think partly, that it had this, immaculate conception, if you want to think about it. Satoshi, whoever she is, or he is, or they are, puts this piece of code into the river, and it grows into this $350 billion, vibrant ecosystem. I don't think it would have been possible if you knew who Satoshi was, right? Gold came from the Incas and the Aztecs. They thought it came from God. Same thing with the Egyptians, right? They thought it was this blessed metal. And so there's something magic about it. And there's something magic about the way Bitcoin literally grew. Partly because people are commercial, partly because people thought they could innovate. There were a lot of pretenders. Litecoin, when you criticize Litecoin, you get hammered by people. It was a variation of Bitcoin. And a lot of people bought Litecoin because they said, well, I can't afford a Bitcoin, but I can afford a Litecoin, which makes no economic sense. But that was their argument. And so I don't think there will be a lot of lasting stores of value outside of Bitcoin. Listen, there are communities that get around these coins that they have value because me and you say they do, right? It's a social construct. It's not the code. Yep. You've seen people fork the code of Bitcoin so many times. Most don't retain any value because their social contract breaks down. And so there are some small little vibrant communities. When I criticized Litecoin the first time, I thought I needed bodyguards because their community was so vibrant. You don't understand us, And I just remember the guy that founded Litecoin sold it all on the top. And I was like, dude, not great as the founder to unload everything literally on the high tick. Great as a speculator, but not as a community builder. And so I don't see new people entering those communities, right? To be fair, they feel almost more like pass the parcel or Ponzi's. And people say, well, what's the difference in Bitcoin? Bitcoin, I see new people entering all the time, institutions. Today, Mass General enters. That's a huge, huge deal, which we can maybe get to later. And so I think in pure store of value coins, I don't think a lot of the smaller ones will have long-lasting gigs. Now, then there's utility, coins, like protocols. You would think about Ethereum, Definity, EOS, Hashgraph, all of these coins that want to be the base layer of trust where lots of things get processed, right? If you think about blockchains, we process tons of...
Hi, I'm Raoul Powell. Sorry to interrupt your video, I know it's a pain in the arse, but look, I want to tell you something important. I can tell that you really want to learn about what's going on in financial markets and understand the global economy in these complicated times. That's what we do at Real Vision. So this YouTube channel is a small fraction of what we actually do. You should really come over to realvision.com and see the 20 or so videos a week that we produce of this kind of quality of content, the deep analysis and understanding of the world around us. So if you click on the link below or go to realvision.com, it costs you $1. I don't think you can afford to be without it.
Coins that want to be the base layer of trust where lots of things get processed, right? If you think about blockchains, we process tons of data. Who can create this network effect where lots of people build on it? as much as I love Bitcoin, I would say 90%, 95% of the real talent that's entering the space as programmers are programming around the Ethereum world, right? That's really where we're going to kind of rebuild the future of finance and the future of lots of things. And so in that respect, I think of it like who's going to build a network effect of programmers and users and entrepreneurs to build on it, and what's the use case, right? Like, how are they attracting users? And so it's a very different use case than Bitcoin, which is just store of value. And when I go back to the periodic table of elements, right? There are 114 elements. Only gold has value just because.
Yeah.
Silver, copper, every other element has value because we use it. So how are these other things going to get used? And in that bucket, there are plenty of great protocols. And there's probabilities that they become the one, right? Cosmos is an interesting protocol that people are using. So I don't call them shit coins at all. I call them, some of them, great projects.
I don't like the term shit coins because it's this tribal thing of it, there can only be one. And there will probably only be one store of value, but these things have inherent value because of the other things that they do. I kind of think of these as horizontals and Bitcoin as a vertical.
So now what you have to look at, there are a lot of, we'll call them ghost chains, right? People that have pushed this idea that we're going to be important, that really are getting no usage. But because they're promoting it and there's a small community and there's a vibrant community, they still have decent market cap.
Right.
I think of Bitcoin Cash and Bitcoin SV. First of all, it feels like the same damn thing, right? There was the fork and then the second fork. I just don't see, and I know, Roger Ver is unbelievably passionate about, Bitcoin Cash, and he's smart, and he's one of the founders of this whole ecosystem. I don't see the uptick. I don't see the use case. I don't see why. And so I think the ghost chains will slowly die off and will be replaced, quite frankly, by the DeFi protocols that get used. You think of Uniswap or YFI. 10 years down the road, 5 years down the road, these could be monsters, but they really feel more like equities, right? You get paid something in a dividend, in a transaction fee that accretes to the coin, owner, and so you can use a discounted cash flow model to look at them.
Yeah, one of the things that's interesting about DeFi is people are trying to real-time value this thing. It's basically like VC with real-time pricing.
Yes.
Right? It's ridiculous because a ton of these are going to fail.
Yep.
A ton of them are going to try new innovation. Some of that innovation will get adopted by somebody else. It's early, but in VC, you don't see any of this mess, like who's going to go bust as soon as they launch their product. But here it is. I mean, how do you get your head around that? Because you're investing in this space now.
So what I used to do in 17 is I'd invest in the sexy projects with good founders and decent communities. And as soon as there was liquidity, I would sell them all. I was like, because same thing, we were 4 months into a project and it felt like we had a market cap and volume for a brief moment of something that should have already gone through, proof of concept. That should have been scaling. And so I thought we were coming up that VC curve way, way prematurely. And I made lots of money in 17. I would literally, they go public, I'd be like 1,001, 1,002, 1,003 sell. And I remember my traders, one in particular, he was like, no, dude, we can't sell this. It's a great project. And I was like, dude, it's my freaking money. And so when I say so, sell. And they wouldn't sell. I would have to stand over them and smash them because they had so bought into this concept of this token. And I'm like, there are hundreds of them coming in. And I think you've got to be pretty cautious today on some of these things. When the market cap gets to stupid levels, when the community is valuing this new protocol at stupid levels, even in this wild bubble we're in with all equities, you got to sell. You got to take some profits off the table. You're going to get chances to enter these. I mean, you look at YFI, which is a spectacular. I love Andre. It's a spectacular, I think, project. I got sucked in at bad prices originally. I bought it at 25. because I missed it. And then it went up, and then it went all the way back down to 9. These things are not one directional trades. We're going to see as they develop, as they build. And so you've got to look at market cap, fully diluted market cap, where they are in the cycle. And then you're a little bit of a momentum trader, but the good projects you want to buy fundamentally on the big dips. There are going to be big dips in these projects. And so I think crypto is going to feel a lot more like venture/equity investing outside of, how you value Bitcoin. Ethereum's really hard to value, right? It's Facebook in some ways. It's this giant network.
That's right. It's a network, and
it very well could be the network that we build lots and lots of the world on. And right now it has store value. It does. Otherwise, if you did any kind of transaction per amount of ether, gas, or fuel, you would never get to the market cap we have. So there's store value. But it really is this forward bet on not knowing how fast this thing scales and how much gets built on it. If you had asked me a year ago, would Visa be launching a level 2 protocol on top of the Ethereum blockchain to use USDC into their 30 million merchants, I'd have been skeptical, but it's happening. And so we're seeing adoption of projects that are going to be built. And I'm using Ethereum kind of generically. They're Ethereum and its partners, if you want to think about, are they going to be level 2 or sideways? I'm not smart enough to know how Cosmos fits in the long run, and I'm not sure anybody is. But that idea that we're going to have this giant distributed supercomputer, that processes all this data and people build on it, that idea is taking off in a rapid fashion.
And so there's going to be players who interconnect all of this as well. Because I kind of think of it not as just
guys that are much smarter than you and I.
I have no idea, right? But it feels like all of this is just going to be a network of networks, where maybe Bitcoin is the base layer, the pristine collateral layer, because we need something like that. And then above that, all of these things seem like maybe they connect in the end. That you can pass a Bitcoin across every single blockchain seamlessly.
And so I tell our investors that outside of Bitcoin, which is now just a macro asset. Matter of fact, I think, and this was not even my thought, I was out to breakfast with Michael Saylor, and I was talking about my thesis, and he said, you know what? The exchanges and the block folios are doing a disservice to having, Bitcoin, Ripple, Ethereum, Bitcoin Cash all lined up like they're the same. Bitcoin should be in this column with the S&P, treasuries, gold, crude, right? The macro assets, right? Then you should have the column of the stable coins, Maker, USDC, Tether. Like most of the stable coins don't move a lot, but it's exciting to see the volume and the total market cap of these things. It tells you something about where that system is going. There's an impact of that growth on Ethereum. And then the protocols, right? And then what I'll call DeFi projects, or the equity-like tokens. And that's where the exchange tokens come. And like if we organized how we talked about and how we looked at these things better, I think it would do a lot of service to Bitcoin, because there are different risk parameters in each of them.
Well, yeah, that's the point. Is you and I, as macro guys, asset allocators, we think of the risk curve, and Bitcoin is the securest of all.
It's the most de-risked.
And the most risky is a new project launched yesterday, which might have might be interesting, might not. And everything falls on that.
Yes. I think people are crazy to trade crosses. It's like, okay, I'm going to trade the Bitcoin Luna cross. You got $380 billion versus whatever the market cap is. I love Luna, by the way. So I'm not bad-mouthing Luna, but that's not a cross. That's not a thing. That's like, I'm going to trade, Tesla sugar. Not a thing either. So I do think, since it's a young industry, it's an enthusiastic industry, but I think, there's a little bit of restructuring in how we talk about things and how we actually visually look at things. Like, if I own CoinMarketCap, I'd shift around how they list the coins. That I think will make it safer and better for investors, and quite frankly, easier than to get people in, because when you're talking about Bitcoin to people, they're not going to be talking about the same risks that, hacking risks, for instance, right? A lot of these DeFi projects were thrown up so quick and weren't completely vetted by, the community of coders that they had vulnerabilities in them, where Bitcoin protocol really has no vulnerabilities. I mean, maybe one in a zillion, but pretty much there's not a hacking risk to Bitcoin. There was a hacking risk to.
So how do you think about allocating along that risk curve? And
so
where are you? Because as we know, it moves around where you want to allocate.
So I was, call it 75, 25, 5 Bitcoin, Ether, DeFi.
Yeah.
And we have a big balance sheet, and so on big amounts of money, Bitcoin is an easier story on a risk-adjusted basis. I'm liking Ethereum more and more as I see this thing go.
I love the chart of Bitcoin Ethereum cross, by the way.
Yeah,
that's really fantastic basing pattern. It looks like Ethereum.
And the other stuff really is venture-y, and that might not be my perfect allocation right now. The nice thing about some of these DeFi guys, you get them right, $1 million turns into 5 million pretty quick, or 5 turns into 10, and then all of a sudden you're like, ah. But I think the lesson there that I took from 17 was be rational, look at market cap and fully diluted market cap, which I think is really important. So look at both those metrics and try to understand what's the take up and what's the community look like, right? I learned this, the best investing lesson I've learned in 2020, and everybody should write this down and write it on their wall. And it wasn't mine, I heard it. And my skill in life is when I hear something I know is right, I'm like, God, that's right. When you're talking about growth stocks, it's really the second derivative, right? So are they, is there sales, is there usage, is it growing? And is it growing at an accelerating rate? And when you get the growth at an accelerating rate, you can stay long, right? Even if prices don't make sense, because that compounding of the second derivative really creates the excitement around. If it was Zoom, like I'm going to short Zoom, that was a mistake to short Zoom. They were growing at an accelerating rate. You can see that with some of these projects. And so I think you need to bring the same acumen to crypto as you have in tech stock investing or macro investing or growth stock. Like,
here's something
you got to have a framework. You got to stay disciplined to it. You got to actually understand what you're investing in. And a lot of people just, they look at just a chart. In big macro things, I love charts. But the moment you get into any market cap less than 50 billion, it's not macro.
No,
it's not.
It's not. You need to know what you're doing at that point, and macro guys don't know what we're doing generally.
Give me a story and a chart, right?
That's right, exactly right. I tell you what, something I've been thinking about is, from 2007 or so, Silicon Valley adopted behavioral economics. Daniel Kahneman taught all of the guys from Google to Facebook to everything about how dopamine works and how like buttons work and all of this, right? And that drove the network effects of all these platforms massively. Bitcoin is really special because the reward system is actually money. The more people you bring into the network, the more the value of the network goes up.
Oh, yes.
It's like the purest form of, nobody could have invented something more perfect for behavioral economics. That's why it's so tribal as well. Is because
I gave a speech in 2000 and probably 16 at the Ethereal conference in San Francisco, and I was like, it's the first thing I really found where by doing good you do well, or by doing well you do good. I couldn't get my grammar properly, and so being a good participant in the community. And I got it from Alex Marcos. Alex Marcos is a brilliant ex-MIT. He started and founded Hudson River Trading, which was the fastest flash boy trading business. Made so much money. He said, I've done fine. I'm getting bored of stealing everyone's money by being a high frequency trader, and I'm going to go. And he became a Bitcoin preacher and Bitcoin core developer. Literally, the core developers are like this keepers of the flame. They sit around and try to fix little bugs in the code. And I remember sitting with him, and I was like, dude, you're like a philanthropist to Bitcoin, because he had done the MIT experiment where he gave every kid at MIT 1 Bitcoin to see what would happen. That was probably 2016. But he was spending all his time with a group of people he paid to work on the Bitcoin protocol, and they never change anything. Once he said, all his time he had got no changes through, but they're working on trying to stop little bugs or making small changes, and they're very important to the community. And I was like, wow, that's all volunteerism. And he's like, dude, I own a ton of Bitcoin, and so I want the system to be good. I want it to go higher. And it clicked on me so purely. I was like, and I felt my role in Bitcoin as being the guy that jumps on TV and tries to educate and tries to get people engaged. So like everybody has a role to play in this community, in any of the crypto communities, right? I was out with Joe Lubin last night, and he has literally given his heart and soul to the Ethereum community. He had spent fortunes of his own money on tools and education and traveling the world and bring like the Pope of Ethereum, more so than Vitalik in lots of ways, who was the genius of Ethereum. And it's a religious thing for him. It's a societal, I'm going to change the world for a good. But he also owns a lot of ETH, and so when it works, he does well as well. And so you're 100% right. It's a very unique system and if you're a shithead, if you're, causing distrust in the system, and your coins go lower,
That's right. I mean, it's a really interesting dynamic. I've never seen anything like it.
There are a lot of free riders.
There are a lot of free riders.
I know a lot of really wealthy guys that buy it and won't tell people. And I'm like, dude, half the thing is you buy it. Like I give Stan Druckenmiller and Paul Jones a lot of credit because they've got big, giant macro reputations that were far larger in their mind than Bitcoin. And, Paul went out and wrote that letter and articulated why he was buying it, knowing that, of course, now you're going to get all the people hammer you on Twitter and put, fake Paul Jones accounts out there and all the stuff that comes from being public. But he was like, yeah, if I'm going to do this, it's my obligation as part of the community.
That's amazing. So listen, one of your typical of a macro guy, you're early to everything, right? That's the sign of a good macro guy. You're always early because you're looking ahead. And you started Galaxy because you thought institutions were coming, and you've been on the tape saying you were wrong, you were early.
Yep.
Here you go. It's now happening like at a ludicrous pace.
Hooray! Now the problem is it's happening so fast, you can't take advantage of it as much as you want to because you can't hire the right people fast enough and you've got competition. It's all fun. We're going to look back, and 5 years from now, we're going to say, 2020, as horrible as Corona was, and lots of people lost their lives. You've been stuck in that same bar every time I've seen you for 6 months. I'm shocked you're not hammered, drunk all the time. I noticed there's no booze left.
No, drunk it all now.
But we're going to look back, and in some weird way, this is going to have been a blessing for the cryptocurrency revolution, for the community. It has accelerated adoption in two separate ways. One is the policy response globally, certainly in the US, crafted a perfect macro story for Bitcoin. There could not be a better macro story. We couldn't, me and you as macro, couldn't write one better than owning Bitcoin as a hard asset right now. But it also wildly accelerated the digitalization of everything. And this digitalization of everything, which from, Zoom, Zoom is part of our life now. We're doing a podcast.
You and I would sit in our office in Manhattan and do an interview, and now we can spin up an interview in 10 minutes on Zoom. Yeah.
And great quality. And so, but that also hit the blockchain space, stable coins, central bank issued digital currencies, the growth of the Ethereum network, all of that being accelerated. And so we see institutions coming in, mostly to Bitcoin to start with, right? It's the safer asset. So today you have an insurance company. Like, let me talk about how important this is. An insurance company with the sacred money they have on their general account, right? Which backs up the shit they're insuring, which needs Fed approval and insurance commission approval to put anything in that portfolio, just bought $100 million. And I would tell you, they're not the only one. And so people say, well, that's a small amount of their assets. Who cares? Because once you start, you don't stop.
Yeah, and it's all well and good for Paul Jones to buy Bitcoin, right? The hedge fund community.
Yeah.
When insurance companies who have 40 trillion of balance sheets do.
I think this could be the most important. I keep thinking, what are the stories of 2020? Michael Saylor was a big story because he took $400 million of a corporate balance sheet and put it in. And now it's, he's got $1 billion. That was a big story. Paul Jones was a big story. I actually think this is a bigger story. And it's not getting the price action right away because, we're at the end of the year and there's this worry of Fed regulation or SEC, Fed, Treasury, that little group putting out this letter on non-custodial wallets. And so I think at least the professionals in the market are nervous that you could see a dip before it goes higher again. But if we step back and think about how important this is, if an insurance company can do this and be public about it, there's not an institution in the world that has to feel ashamed about buying Bitcoin. And they are all, and I can tell you from our bank, every bank, we're dealing with banks that we never dealt with before. How do we get involved? And they're not all going to get involved the same way. Some it's through their wealth management channel because their customers are calling them saying, why can't I buy Bitcoin with you guys? You're my freaking banker. If it's Goldman Sachs or UBS or Morgan Stanley or whoever. And so you're going to see wealth management changes. You're going to see the ability to trade in custody because as stable coins grow and you've got a dollar stable coin and a euro stable coin, and now you're going to Europe or you decide you like Europe, you want to sell your dollar stable coins for euro stable coins. That's an FX trade. Well, are you literally going to be Deutsche Bank running an FX desk and say, yeah, we're going to do most of the FX, but we're not going to do the stable coin FX? No chance. And so stable coins are going to bring in the trading desks at banks into this business faster than you can think. And that architecture is the same architecture that's going to be needed to trade Ethereum, Bitcoin, and all the other cryptos. And so you're going to see this convergence, right? The bank account is going to become a wallet, period. And it's why, PayPal would, I'm ranking. I'm like, almost like, geez, who are my rookies of the year? Is it PayPal, Michael Saylor, Mass Financial or whatever, the insurance company, Paul Jones, they're all vying for it, but all wildly important, all coming from different parts of the institutional community. And so like the herd is here.
So what are you trying to build out at Galaxy now? Because now you're seeing things develop. So as you said, it's now a mad scramble to get some real estate in this. Listen, what do you want to do?
We have 4 businesses. We want to be an asset manager. So for people that need help, we want to manage their assets for them. So Bitcoin fund, an index fund. We'll have some alpha products. We have a big venture fund, a gaming fund. We want to be sales and trading. We want to provide liquidity to people. So that's, you want to buy your Bitcoin, buy it through us. Options, we're a big derivative market maker. So that's hedging for miners, hedging for corporates at one point, not at this point. We want to be a lender. So there's a huge need for capital in the system. So lending to mining, we call it MiFi, mining finance, lending to speculators, lending to other players in the system. We have a big venture arm on our balance sheet. And so we would be making investments in the coolest new DeFi projects. I see that DeFi literally as a SaaS business. Because what is DeFi after all? DeFi is taking a blockchain to financial services. In 2 years, we're going to call DeFi FinTech. It's taking a blockchain to financial services. And so it's hard to get into the best projects, right? You look at, Polychain and Paradigm, those guys have done an amazing job of getting into the best projects. You got to provide the entrepreneurs something. By the time those projects have grown a little bit, you're using them. You're staking with them. You're buying insurance from them. You're lending with them. And so by being a user of them, if you think about it, this whole thing looks like a SaaS business. It's not like a venture business. It's I'm investing and then using and helping them grow, and that money will flow around through the system. So we're building that capacity inside the company. We still have, because I'm a prop guy at my core, we run a big position in coins, both Bitcoin, Ethereum, and in other coins, sometimes long, short. Up until this year, I traded a shack load. I have done a lot less trading in Bitcoin. I literally went out and said it on my Twitter and a few interviews that the first time in my life I became a hodler. Partly because I'm so busy, but partly because I'm so much more convicted that this isn't 2017, where I kept telling everyone this was a speculative mania, that this is the start of a multi-year, 100% giant transformative rally. And it's easy for me to see Bitcoin being at 50,000 next year, right? That's 10% of gold. I think gold's going higher. And I know once we get to 10% of gold, we're like, why is it only 10% of gold? Why isn't it 25% of gold? And then it's going to eclipse gold at one point. That's not going to happen in a year. Guarantee it's not going to happen in a year. But these things happen faster when you're getting these kind of network effects. And so I literally think, listen, could Bitcoin go down in the next 3 days because Steve Mnuchin, in his dying days in Treasury with 40 days left?
What is this? A couple of people have mentioned to me the regulation. I've seen, I saw some tweets over the weekend, and my point was, you might not like regulation, but it's going to bring all the people you want into the space.
Well, this is kind of a nuanced subject. What the regulators, both here and overseas, and the G7 are most worried about is me and you. We have a bunch of Bitcoin. We could send it to Kim Jong-un right now. And that worries them. Period. It's that terrorist financing, illicit stuff that worries them. And they think, well, if it's a custodied account, right? Then we know, just like we know banks, you can't send more than $10,000 or $10,000 cash without getting a notice. So they're trying to use that correlate. What people have been arguing to them is, first of all, let's not use a sledgehammer to kill a fly. Second, there are things like, companies like Chainalysis or other security companies that are really good at understanding big movements around the blockchain, right? It's all a public ledger. And so is it a real problem? Are there other ways to solve it than smashing, non-custodial wallets and really pushing innovation offshore? And I think in a good engaged dialogue, regulators will end up getting there. What is frustrating is this is the last 40 days of administration, and it feels like there's some attempt to let's get our fingers stamped on the paper before we leave and have a lot less relevance in this game. And so the worry is this weekend, next week, there's going to be a letter by the Secretary of Treasury, head of the SEC, head of the Fed, and head of the CFTC. Three of the four that are with all likelihood gone in 40 days that give this new guidance that it's going to be illegal or some penalty or some surveillance around non-custodial wallets, which will really hurt the exchanges. And it's impossible to some degree to monitor, right? And it's really an unnuanced and I think less than educated approach that the regulators will go with. And now it won't be law. It gets put out for 45 days or 60 days of notice, discussion from the community, and that's going to roll right into a new administration. And so it's very complicated on what actually happens, but it's a bad signal. And it's a frustrating one because there are a lot of smart people that behind the scenes have been working, from consulting groups like Coin Market Center, as they're called, one of the industry groups that I'm sure we all fund, to people behind the scenes that have been having conversations with the regulators. Listen, regulators, this is complicated stuff.
It is, but why are they doing it? Why are they rushing it through? I understand what they're trying to do. As you said, it seems clunky. My view is that it probably gets changed. whatever happens.
Yeah.
But why the rush?
The whole Trump administration has this a little bit, let's sabotage Biden on the way out. I'm not certain that is conscious in, Secretary Mnuchin's behavior or any of the other regulators involved in this, but they know they have 40 days left and they're gone. It's unbelievable heady. Your Secretary of Treasury, your name is on the frickin' dollar bill. You've got all this power, and in 40 days, you're out of job. And given that you've been in the Trump administration, it's going to be hard to get a job. And even if you've been a good actor, you haven't seen a lot of those guys emerge and new. Gary Cohn is not the CEO of Wells Fargo name. And, Gary's an unbelievably capable guy, and he was a Democrat that joined a Republican administration and tried his best to help the country. I have nothing but respect for what he did. But, that administration has a stink to it. So part of me thinks this is a last hurrah.
So, okay, the other thing that's happening at lightning speed is the central bank digital currencies. How do you think this is all going to play into it? And what is the regulation they're going to build around that and stable coins? How does this all fit together?
Yeah, it's really interesting. What scares everybody is that Facebook's going to be involved. Just because Facebook's too big, they're too powerful, they take our data. And so as cool as Libra is, or the new name for Libra, they've changed the name, it's a net negative. It's become a net negative from a regulatory perspective.
Yeah.
It's going to be a net positive from the fact that there'd be 2.5 billion people with Novi wallets, almost named after me, Novi, Novo, that will be able to buy and sell Bitcoin, buy and sell, stable coins, the new Libra, whatever they're going to call it. Is going to be
Diem.
Yeah, Diem. Diem is going to be a dollar-based stablecoin. And so this is all a battle for payments. And what's driving me crazy, Representative Taleb, and there's some stupid banking bill that they put in. I was like, dude, I'm a progressive. I have funded progressives. I am not even center left. I'm progressive. And crypto is the most progressive thing going, right? Crypto is about the people's revolution. Crypto is about taking the monopoly of transferring money away from banks and not having to pay $3.50 at an ATM and being able to wire money as cheap as I can wire a photograph to you. This is the long distance call. It used to be $2 a minute, and now it's free.
Yeah.
And yet the banks put a huge lobby on the Democratic side. And so we're going to have to fight that. Like, if you're a Democrat, you have to fight your own and say, hey, let's get to the point where we all understand what this is. It really is an empowering technology, empowering for the little guy, not just the big guy. It's going to cut the cost structure. Stable coins, unlike Bitcoin, which is a challenge to the stability of fiat, stablecoins literally is a challenge to a banking monopoly on movements of money. And you're going to take a huge inefficient chunk out, and that's going to go back, hopefully, to the consumer.
Yeah, and the central banks themselves getting involved in the whole stablecoin game, which is essentially what they're doing with the central bank digital currencies. It kind of asks the question, what happens to the banks, the money center banks?
Yes. And listen, it's really interesting. How do you get velocity of money? Like, how do you, the banks are the money multiplier. And if the account is literally on the Fed's balance sheet, I don't think it will be. I think the U.S. approach is going to be to allow private sector groups like, USDC, like Diem, to do stable coins, but to have very strict regulation on where that money gets deposited, either deposit with the Fed or deposit with the Fed bank. But how do you get the velocity of that? How do you get the leverage that banks get, right? To be determined. And how do
that's an interesting play in itself from an investment perspective, because what happens if that leverage capability moves to the DeFi fintech layer? Right. So for investors like you, that's a fortune to be made, because you basically take a profit center and a revenue stream from the banks and stick it into a whole new group of people.
100% right. And so I don't have enough time in my life, because every time the best discussions I have is when I meet with these young, boy and girl geniuses who are crafting the next DeFi project, right? I met with Tarun, who colorful dresser who's coming up with a project. And I'm sitting there thinking, yeah, yep, very cool, right? He's got a protocol that, so when you have something like Uniswap or YFI, what the governance is, what we charge in commission is a governance decision based on who's using who has the tokens. He's got one that will optimize using AI my vote on governance. And so I don't even have to make the vote. The AI optimizes the vote, for my max profit potential and the community profit potential. I mean, so you have tokens to actually run your other tokens. I mean, it's a fascinating world that's being developed at lightning speed. The guy that does compound, we've traded interest rates our whole lives. 1 day, 2 day, 3 day, never a spot interest rate. It takes a while to get your brain around what does it even mean to be a spot interest rate. The rate changes by the second, not by, hey, what's your 2 day? I was a commercial paper salesman. You had your overnight 30, you had your 30 day, your 90 day, Corporate America was funded by commercial paper. And we used to joke all the time, we're hanging the 30-day Dow, Dow Jones company would raise money at LIBOR +8 or LIBOR -6. This is all going to be done literally by computers.
And what's fascinating, I've been talking about it, and I know you'll find it fascinating too, is this yield curve that's developing.
Yeah.
This whole space is developing its own yield curve, and Bitcoin yet doesn't have a long-term yield curve, but it's all going to come
within 12 months.
It's fascinating, right?
In some ways, one of our best businesses is this term structure arbitrage business, where you've got all these different exchanges, and so arbitrage really is basically a lending business. It's like, what are you getting paid in the futures role or in exchange X versus exchange Y? And so you can borrow cheap and you can lend rich. And so in some ways, this taking a little more time is good for the guys who run these arbitrage businesses, because there's lots of money to be made in the inefficiencies. But it's shocking how fast the efficiencies are coming in. And so I would bet in 2 or 3 years, we actually have a real pretty efficient yield curve, not an inefficient one.
Yeah, but the real opportunity in this space is just from the pure alpha of not only, the beta's good, and then there's alpha as well. I mean, there's some interesting people, buying tokens that people haven't been looking at properly, doing some work on them. And several people are up 300% this year doing stuff like that. It's really interesting.
Yeah, no doubt. And as I tell our customers who are more institutional, you know what, Bitcoin, a little ETH, and everything in venture or put into fund, because to really get into DeFi, or you've got to either be focused with a real, you have to have venture and trading skill set and really a lot of focus. There are plenty of young guys that do it. I'm shocked. My daughter's boyfriend, he knew more about crypto than I did. I was like, whoa, like he was a college kid, and then he went on, and his buddy was, and now his buddy's working at, various Silver's firm. And so I'm not saying you can't do it as a non-professional. There's plenty of people, but for older people especially, you're going to just get burned by hearing someone's story and buying.
I find it really hard to get beneath the macro layer. After that, I'm like, this is outside of my skill set. There's too much, it's too technical, it's really complex. And I think you're right, because a lot of people can't go into the space by getting into the weeds, and they just have to give it to somebody like you guys, whoever, who knows what they're doing, and create an allocation for them. It's the only way of approaching it. Everything is new. Everything.
Yeah.
It's not like picking up books. It's like everything is new.
Yeah, no doubt about it. And even me, who has a company that does it, if I go a week without talking to my 3 young smart guys, I feel stupid. And then we'll have invested in a token, I'll own some, and 2 weeks later, someone will ask me about it. I'll be like, oh, geez, I know it does. Listen, like in anything, you got to have repetition. You got to dive in, and just hearing your story once is, well, for me, hearing a story once, I think I understand it. I do. It comes in one ear out the other ear. So I need to have lots of repetition, and then I finally start really understanding it. People learn different ways. And so in a space that's changing that quickly, you really have to immerse yourself.
So I'm not going to get you on without talking about macro. What's your view? What's going on?
I was talking to one of I won't name him, but one of literally the top 5 legends in the investing world this morning. And I said, I'm worried about, Airbnb up 120% on day one, and Snowflake at 100 times revenue. And like, I was talking to another friend, and he went from being worth 2 billion to 8 billion because his company I was like, this numbers is becoming candy money, and it really worries me. And so I was like, I understand we're going to keep rates low forever, and and growth is picking up. Like, I love crude. I'm long crude. You could be long copper. We are going to have a big growth surprise early next year, and then in the second quarter, it's going to explode. And so there's a macro reason to be long. And his view was, he said, listen, it is scary. It makes no sense. You have to decide, I'm going to ride it or not. And then no regrets if you decide you're not going to ride it. Like, we're riding this frenzied bubble of this new regime that we're in when you're printing more money than we've ever seen before. What's driving Bitcoin is driving Tesla and Snowflake and every venture bet. And, Masa Son's going to look like a genius again after having been really dumb with, one company. Oh, he's dumb, he's stupid. Genius. He made $12 billion alone on
Dash.
Yes, 12 billion. Billion, not million, billion. SoftBank. That makes up for a lot of mistakes. And so I think, what my pal told me is right. We are riding this wave. I look at the Nikkei chart, it looks like it's going to 40,000.
I know, I look at the same.
And so I think you want to trade with momentum. Stan Druckenmiller once said, in markets like this, you got to stay on the airplane, but you want the seat closest to the exit. And so you got to monitor lots of things. So what's the ballet that could change it? Maybe growth comes back so fast and inflation spikes, and the new Fed chairman says, I know I said we were going to not move rates for 3 years, but fuck, this is nerve-wracking, and flinches and moves rates. And all of a sudden that shifts the paradigm, and gold goes down and Bitcoin comes lower, and and the whole free money forever thing shifts. I'm not predicting that, no. But I keep thinking, like, how do you create a ballet that changes things? One is we have more social upheaval. Like, okay, now we got Democrats in charge, but there's centrists, and since Joe Biden's got elected, the rich have gotten richer. Every month that Donald Trump was elected, the rich got richer. Every month that Obama and Bush were elected, the rich got richer. The rich are so much richer than the masses. And you read it every day. You should, if you don't have Robert Reich on your Twitter. Robert Reich was Clinton's Secretary of Labor. Right. He was a Harvard professor. Now I think he's a Berkeley professor. Short, smart, funny, and angry. But he is a progressive who just says, this makes no sense, that the top 71 families own more than the entire African-American community by 2, that the top 400 families own more than the bottom 50% of America. Like, we're at ludicrous stretch in the Gini index, or the gap between rich and poor. And so that could also, things could go haywire. I'm not predicting it, of course, but like, I keep thinking, like, what changes things?
Tech regulation is another one. You could upset.
Tech regulation. If I was in charge, I'd regulate tech.
Yeah, me too.
I'd tell the Apple store, you can't charge 35% for me to app. Let's make that 3%. Apple will make less money, and other companies will make more money. And I haven't studied all that. I'm just intuitively thinking, like, Teddy Roosevelt, the Rough Rider, right, was the trust buster. Like, in some ways, maybe we need Teddy Roosevelt, the Rough Rider, to come back in. Like, we have this giant concentration of this power and wealth that probably isn't good for society as a whole. And so something's going to happen that changes things. We need to be tight to the screens and intellectually honest enough that you can change your mind. Right now, it doesn't seem to be the time, but I'm nervous. So I'm less nervous about Bitcoin, bizarrely, even though I just told you it's all correlated, because I think Bitcoin, we are so early in the adoption cycle. And I see the pipeline. Right? We just had our first insurance company. How many insurance companies are in the world? Remember, and I can tell you, I know of a second one. I can't name them, but I know of a second one. There's a great TED video. Everyone should watch it on what a movement is. Some guy dancing like this. He looks like a complete maniac on a hill. Everyone looks at him for like 30 seconds. And then the second guy goes out and starts dancing like this. And then the third guy, and pretty soon the whole hill is dancing like this. And you're like, a movement isn't the first guy. It takes courage to be the second guy, and then the third guy, and then you've got a movement. We already got 2 insurance companies. We're going to have a movement. We have 2 corporates. We're going to have a movement, right? Wait till the third corporate, and then you're going to be at 10, and then 50. And so we're so early in this adoption cycle. Even if the macro goes against us a little bit, I still think we're protected, because there's an inertia to this movement that's just going to keep rolling.
So
I'm getting more bullish. I'm going to go buy some Bitcoin when I get off the phone.
Yeah, no, I'm bullish again. So in macro world, keep the window seat just in case you need to jump off.
Yep.
In Bitcoin world,
long crude.
Long crude.
Love that trade. Partly because supply's constricting and demand's going to pick up. Long copper, long Nikkei. I'm short 30 years, and all year long I've shorted, bought short. I'm net P&L 0. Have had no joy, and it just feels to me like it's probably wasted capital because the Fed buys, but it does feel to me like it's the wrong price, and it's a small position. But the ones I like best: crude, Nikkei, of course, crypto. And I'm short the dollar. I'm short the dollar against, and I knew you were on the other side of this. And the only time this year you cost me a fortune, and you were so convincing about that long dollar in the crises, and you were so right on the unwind of risk. And as soon as risk started to be put back on, your whole thesis went reverse. And now I'm short a lot of dollar EM. I've got Brazil. I've got Chile. Chile looks like a great chart. Look at the dollar Chile chart. Brazil, Chile, ruble. Even though I hate Putin.
So, and final question, because I need to run, but why bother when Bitcoin, look at the chart of Bitcoin versus every single thing that you've mentioned, and it's breaking out against everything. It's like, I can't find a reason to own anything else.
There's a fair point. I'm a bit of a trading addict.
I know.
And I do think, because even when I left Fortress, was I going to trade macro? I do a lot of venture investing. I've got a private equity company. I have a big stake in Bojangles. So I have that chicken box behind me usually in my interviews. Why macro? It's a brutal sport. You always get a sore back right here. You're up all the time. And partly liking it, but partly the way I think I provide value to other people in conversations is my ability to understand how the world's moving. Yeah. And I think if I didn't trade it, I wouldn't pay attention. I wouldn't have any idea what's happening in the crude market if I didn't have any money at stake, or politics in Russia, or what this Brexit thing really is about. And so I don't trade it with huge size anymore, enough to make it hurt. But I'm not running a giant hedge fund, right? I run about a fifth of my capital in macro. But it connects me. And I think it helps in crypto to understand the world.
Yeah, it does, because it connects all the dots of everything. That's what's so good about macro. It's a really useful skill set to have. Brilliant, my friend. Thank you ever so much. Good to speak to you as ever. And I'll see you. Well.
Good luck and have a great Christmas.
And you, my friend. Take care.
Thank you for watching this interview. This is just a taste of what we do at Real Vision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.